Welcome back to the channel, guys. My name is Tyler. I am 22 years old. I bought my first property at 19 years old, became a real estate agent, started investing in real estate, as well as learning to master the markets. So I hope we can bring some value to each other on this channel. Always feel free to comment down below. Let me know what your opinion is on this topic. Now, today we are talking about ViacomCBS, and I'm going to be giving you guys my reasoning on why I think this is easily a 10 to 25x stock in the next 5 to 10 years. I think it's grossly undervalued, and especially after its pullback, we should talk about it on this channel. So stick with me. I think you're gonna like what I got for you. So we are talking about ViacomCBS, and I do want to point out, first things first, I had no idea of the short squeeze that we just had because of Arcos Capital going bust, and they had such a big position in Viacom, and the company did announce they're selling shares, which is actually a good thing if you're a long-term investor. But in a short and simple version, that is why the stock fell, and I just see long-term value here. The more I look into the service and the products that they have, which we'll get into more later, I do think this is a good company. And especially for me, I didn't know about this whole thing. I didn't even know about Paramount Plus. I guess I'm living under a rock, but people started talking about it at work, and I started to look into it, and they have some of the biggest channels and networks in the history of television and streaming. And when you hear multiple people at your workplace talking about a product or service that is available to actually invest in, that's something you should always look into. Don't underestimate a couple people talking about a service, because if a couple people are talking about a service or a product, more people are talking about it everywhere else. So if you guys are still clueless to what Paramount Plus is, just like I was, obviously you're not alone. Now, like I said, they have some of the biggest channels and networks in streaming history and cable TV history, and some of those are CBS, BET Channel, Comedy Central, Nickelodeon, MTV, and the Smithsonian Channel. Now, if you guys grew up anything like me, or if you're around my age, I'm 22 years old, then a lot of these channels, you know these channels. You know MTV, Nickelodeon, Comedy Central, BET Channel, and some of the old CBS cartoons. Now, this is really only scratching the surface on what Paramount Plus is, because they do have original content, and not trying to judge a book by its cover too much. These do look like good series. Star Trek looks really good. The Stand looks good. Why Women Kill looks good. All of these shows really look good and look compelling and makes you want to watch them. I don't know if I'm judging it too much by the look of it, but also, they do have sports. So if you're a sports guy, whatever the case is, they have NFL, golf, soccer, SEC, March Madness, a bunch of stuff for pretty much anybody. And some of this stuff is hard to actually find on television sometimes, and it just doesn't make sense to pay for television when you got it all in one package. So obviously CBS, they have their news, CBS This Morning, 60 Minutes, 48 Hours, Face the Nation, and CBS Evening News. So obviously 2020, a lot of people watch the news now, which nothing wrong with that. I like the news myself. And then they own the Nickelodeon channel. They own Nick Jr. and the Nickelodeon channel. So they have SpongeBob, iCarly, Henry Danger, Paw Patrol, Dora, Peppa Pig, Blue's Clues, and the list literally goes on and on. If you can think of anything that's Nickelodeon, they have it on here. So it does appeal to kids and adults. Whatever you're into, there is something, like I said, something on here for you. Paramount Plus launched in the US, Canada, and Latin America on March 4th. Nordic countries will get Paramount Plus on March 25th, while Australia is expected to get the streaming service later in 2021. So Paramount Plus just launched less than a month ago, so I think it's important to keep in mind there's going to be some people that love it, some people that hate it, and nothing is really set in stone. So if you hear negative articles or even positive articles, nothing is set in stone. This could flop or be a major success. I think it'll be a major success just because of how many subscribers we have seen already. Paramount Plus claimed 19.2 million subscribers at launch. So this is basically within the first week, and the company also owns the Showtime pay TV network and a skinny bundle cable service called Pluto. Go ahead and show you guys Pluto too. Just go to Pluto TV. You don't have to sign up. You don't have to do anything. And you can watch, I think it's 100 channels for free. Some of the best channels on TV essentially, and over 1,000 movies for free. Now, I'm not sure how long they're going to do this or how much money they are making from this. They must have to advertise something to make it free and to do this for people, but there's a ton of good shows like Bellator, 255, that's on right now. Everybody Hates Chris, good burger. Best at Demi Lovato. I was just watching Wolf of Wall Street. I know a lot of you damn stock traders know Wolf of Wall Street. Tons of good movies though, and it's all for free, so I figured I would put this in the video. I'm not sure how much it actually benefits the company. I'm sure they will charge for this in the near future, but something to keep in mind. And Pluto TV looks like it could be a great alternative to normal cable television, so that does look pretty cool. And like I said, it's free, so I want to put it in the video in case you guys want to go check it out. I encourage you guys to do that. But looking into the revenue at CBS in 2020, and keep in mind they did not have their streaming service, so this will definitely boost their earnings by quite a bit in 2021. In 2020, ViacomCBS earned $2.42 billion, $3.92 per share fully diluted on revenue of $25.28 billion. So this $2.42 billion is profits. And if we do the math on this, 2.42 divided by 25.28 is almost a 10% profit margin. So this is not bad. It definitely can improve, and I expect this streaming service over the long run to get their profit margin more around 20%. Also, if we come to Google Trends, like I like to do when searching up a new topic or a highly talked about topic, I just like to go to Google Trends and type in whatever you want to search for and see about the search activity. Now, as we have already established, they started their program March 4th was the first day, so we were extremely elevated. There was a lot of new searches, and we have since come down. That is probably because the stock has went down. You do see a direct correlation between Google Trends and the stock market. A lot of people search for this stuff, but it is still highly elevated, around 60%. So we need more data, and this needs to become more refined. So in other words, we need more time, but this does look like it will stay elevated, and the longer it stays elevated, definitely the better. Now, looking at Viacom stock once again, after this sell-off, they are at a $29.65 billion market cap, and with their $2.42 billion in profits for 2020, as well as they pay a 2.13% dividend, this stock looks like an absolute steal, especially at a less than $30 billion market cap, and they just started a streaming service, which is up for debate on how successful it's going to be, but I think it's going to be a huge hit. So if it's a huge hit, they're already making good profits, around a 10% profit margin. Like I said, that could be improved on. Then this is definitely a steal at $30 billion. Now, with this 2% dividend, if we come to their dividend history, we can see they have paid out a dividend since 2006, upping it pretty much every single year. It was a little bit higher in 2008, but it is pretty much at the highest point. They've raised it the last since 2014, 2011, since basically 2010, 2009, they have raised their dividend after cutting it in 2008, and we all know why they cut it in 2008. We were going through the Great Recession, damn near the financial crash of the whole system in 2008. So they have been raising their dividend ever since 2008. So that is a good thing. They just had X dividend, and they pay out annually 96 cents per share in dividends. So that is good. And for their PE ratio, it's at 11.36%. So times earnings. So that is really low too for a streaming service. If this gets off the ground like I think it will, this stock is just overall a bargain. One more thing I do want to point out about the 2.13% dividend. If CBS does get serious about streaming, which I do believe they will not be forced to cut their dividend, but I do think that is a very, very strong possibility, so they can make new original content and stay fresh. So that is something, and that will be good for the company. Slashing a dividend, getting rid of a dividend sounds like a bad thing, but when you're reinvesting it back into the business, investors are going to love that and pile into it. So I do think this is more of a 6-month to 12-month scenario. I do think this will happen, and I think it'll help the share price go up. As far as my price targets and how I'm going to play this, I want to get a pretty big position relative to my portfolio in this company. I want $3,000 to $5,000 invested in this company with about 60% in shares. So if I have $3,000 to put into it, I'm going to put $2,000 into shares, spend $1,000 in options. I'll more likely go to probably $4,000, put 60% into shares and 40% into options. Now, as far as options, you know me, I'm a big fan of the 2023 LEAP contract. So anything that's really like 2 or 3 years, any more time the better. I'm always a fan of time, because when you get pullbacks like we just had in a lot of the major growth stocks that most of us invest in, you don't get hurt as bad. You don't totally lose everything. Like, the value will come back to those contracts before 2023, 2022. I'm more than confident of it. So as far as the strikes, I think the $60 to $70 strikes are very good. I think you would be deep in the money on these by 2023. I honestly think Viacom could be sustained around $100 to $120 by 2023. Maybe even as high as $150 to $170, depending how successful the streaming platform is. And like we have already seen, they had almost 20 million subscribers join within the first week. So that does look very good, and that is really how I would play this. I would try to get closer to the strike, just to the actual price, a strike closer to the price, because we have got beaten down so much. I mean, we were at $100, so there is a good chance that we bounce back and the stock does stay pretty volatile. So you can take advantage of that a lot easier with a closer strike. That's going to wrap up this video right here. Just to reiterate, by 2025, my strike price is $200 a share. I think there's no way, if this is not a hit, which there's no way in my opinion it won't be, will be at least $200 a share. $200 to $300 a share is pretty reasonable, considering they are only at a $30 billion market cap, and they are already making good money with their cable services before this product was even around. So that is my thesis behind it. Hopefully you guys learned something new. If you didn't, whatever, let me know down below in the comments. Like and subscribe if you made it to the end. And I have a Discord link in the description where you can join that. I send out all of my buy and sell alerts. So as soon as I open a position in ViacomCBS or any other stock, you will know about it first, well before I ever make a video. So join over there. I'm not going to keep it open too much longer. I don't want it to get too crowded, but hope you guys enjoy the rest of your extended weekend. I'm going to get out of here. Peace out.